Have you ever wondered what happens when entrepreneurship, environmental sustainability and venture capital collide? If so, you're like me, and you're in the right place. Welcome to The Green Adventure. On the show, you'll learn from the critical insights of both founders and investors alike. Not random advice or generic guides, but real stories born out of their experience with genuine climate action. We aspire to create a network of people collaborating to build the green economy, accelerating us towards this critical target of net zero emissions. I'm your host and founder of the show, Jake Woodhouse. For all the notes, links and episodes, please visit www.greenadventure.com. Take care when typing that in. Adventure is spelt with a double D. Thank you for listening and enjoy the episode. Today we speak with Andrew Wordsworth, co-founder and managing director of Sustainable Ventures. Sustainable Ventures have been at the forefront of the sustainability startup space in London for many years now, evolving into the Sustainable Accelerator and Sustainable Workspaces. Listen closely as Andrew explains his insights from both sides of the table, as both entrepreneur and investor. He explains why working in the cleantech space gets him out of bed in the morning, how important trust between entrepreneur and investor is, and how a little money at seed stage can create large value. Andrew has overseen the growth of a very impressive organisation. Enjoy. Hi, Andrew. Thank you so much for coming on the show.
Hi, well, great to be here.
Thank you so much. So, to kick things off for the listeners out there, could you give us a very high-level summary of your current role, please?
Okay, so I'm Andrew Wordsworth. I'm the managing partner and co-founder of a company called Sustainable Ventures. Sustainable Ventures has a number of different sort of business units. We're probably best known for our workspaces. We run 3 co-working spaces in southeast London, where we have sort of capacity for about 600-700 entrepreneurs, all of whom are working in the sustainability space, and that's, as I say, it's quite an exciting opportunity and reflects the growth of the sector. We also run a small investment fund, providing seed stage investment to about 8 companies per year, again in the kind of climate change and resource scarcity, and companies that have commercial solutions to address those. Our sort of where we sort of started was around originating our own companies. We're sort of serial entrepreneurs. And have founded over the last 8 years 7 companies, primarily in the kind of mobility and kind of energy efficiency built environment space. And finally, we provide a range of sort of support services, either funded through grant programs. We run the GLA's Better Futures program, or provide sort of bringing together our community into sort of large sort of demonstration projects that we then seek to attract grant funding into.
Great, thank you, Andrew. Well, yeah, I mean, so it's really 4 areas then: your workspace business, your investment business, the company builder area where you started off, and then the kind of consultancy and event space. To say the very least, when I first started researching the cleantech market in London, you guys were almost very top of the list. So you underplay that for sure. To help us understand then the journey that you've been on, perhaps you could take a step back to when you first founded the business and what you'd done prior to founding Sustainable Ventures, and the kind of the process that you'd been through to actually become a founder.
Okay, so my background, I'm a chemical engineer, and have basically been in the energy sector pretty much for the whole of my career. After a sort of short spell in consulting, I joined the Carbon Trust in 2002, and for most of my time there until founding Sustainable Ventures, I ran their kind of spin-out arm called Carbon Trust Enterprises, where we basically created new ventures that were tackling sort of climate change and bringing together sort of public-private partnerships. So that was renewable development companies. We started a property fund called Low Carbon Workplace, and as well as sort of technology businesses as well, sort of third generation PV and so on. That was obviously at a much larger scale. We attracted something like 250, 300 million pounds worth of capital into those businesses. It's like, Low Carbon Workplace, for example, is now the UK's largest sort of dedicated carbon property fund. In 2011, after I'd been working with my co-founder Chris Morris, I left Carbon Trust but the two of us set up Sustainable Ventures.
So Chris was at Carbon Trust with
Chris
you?
was working with me on kind of new venture development.
Great.
in the Carbon Trust team. The origins of the business are really, again, where our sort of heart of Sustainable Ventures basically sort of still sits. And we basically set about creating and sort of growing a range of our own ventures. So the two initial ones were e-car club, which is an electric vehicle car sharing club, and Power Vault, which is domestic energy storage. Chris basically was the kind of launch MD of eCar, and we grew that through crowdfunding, through angel investment, through institutional investment from Centrica, until 2015 when Europcar acquired a majority stake. So eCar we're sort of fully exited from that.
Fantastic, well done.
Which actually created the world's first crowdfunded exit. It's just sort of a small sort of footnote in history of crowdfunding.
Awesome.
The Power Vault is still going strong. It's growing substantially, and we've been through several funding rounds. That's now run by Joe Warren and probably about 25 people in that management team. But we still stay heavily involved as kind of active non-execs in that business.
Yeah, I must confess, I was lucky to be part of the latest financing round of Power Vault. So
right, good.
With
Thank you very much.
With the Green Angel Syndicate, I managed to sneak in with some equity. Both eCar Club and Power Vault, really interesting businesses in themselves, and they kind of speak volumes of what you and Chris must have envisaged all that time ago. I guess that leads me nicely to talk really around a kind of thesis. So what's your personal rationale for being in this space and looking at building businesses alongside a sustainability mission, and why do you think it's such an exciting place to be?
Okay, so Sustainable Ventures' vision is for a world where there are commercial solutions to the twin challenges of climate change and resource scarcity. That vision is baked very much into the values of all the people who work in SV. Important to stress, we very much don't like trading off sort of impact versus commercial reality. So we basically, any business that we get involved with, even in terms of the sort of tenants that we like to bring in, has to be delivering both a sort of a commercial sustainable success story plus delivering impact. That in some ways reflects kind of, I guess, my sort of personal beliefs, that you shouldn't, we can create valuable companies that deliver returns to investors, but at the same time are delivering and tackling these really critical challenges. In order to do that, we're trying to develop the UK's leading venture development company in this space, and everything we do is all around moving companies from kind of back of the beer mat through to exit. So I think that's when we're looking at what do we do, it's based on our own experience of taking companies through that journey on kind of the entrepreneur's side of the fence. We often think, wouldn't it be really handy if we'd have had a flexible workspace so we didn't have to constantly move offices? Wouldn't it be nice if somebody had sort of found us a corporate partner that we could then put demonstration units into?
Which you now have done.
So a lot of things I say are around that. Would we have bought this, and would this have made our journey easier? And I say that's where the company's now migrated. Again, from working with kind of one startup, which is our own per year, we now work with over 80 companies, 80 SMEs in this sector, and again provide support in whatever way they need.
Well, it's why I'm so excited to speak to you today, Andrew, and learn about this journey that you've been on, because as not only an investor but also an entrepreneur yourself, there's a kind of story here of decision making that, at one point it didn't ever seem possible. The tour you've just given me of the new workspace you guys are developing 5 years ago, I'm sure you wouldn't have thought that would be something in the pipeline. But okay, I mean, let's perhaps talk a little bit around the support that you're giving to businesses out there. One company in particular, Research, JP is on the show as well. Mm-hmm. So
right.
He's now part of your Accelerator program, I understand. Perhaps you can talk to us a little bit about that program and how you select companies and how companies approach you, and as a potential investor or partner in their growth, what is it you're looking for in the businesses that you get sent or analysed?
Okay, so I think around about 2015, on the back of the e-car exit, we had from talking to people in the industry had started to sort of identify that whilst there were sort of accelerators, incubators, and so on across the UK, there were none that were focused on the sector. So you've got your tech stars, and there's something called media and advertising technology. There was Bethnal Green were looking at kind of the impact side of things, and I guess sort of coupled with that, we also saw that a lot of companies were struggling for basically kind of that first investment. A lot of sort of very promising technologies were coming through. Were probably too early for the kind of the angel market. And I think obviously you mentioned Green Angel Syndicates, very good friends of ours. A lot of the time the feedback we were getting was, come back when you've got some traction, when you've got your first customer order. And there was this gap between companies saying, well, I've developed my technology, and how do I feed myself? How do I provide the working capital, develop the first prototype products to get that first order? And so we basically sort of put those two sort of gaps together and identified that we could raise the Sustainable Accelerator Fund. So the first one in 2017, we raised just over £800,000 and made 7 investments, averaging just over £100,000 each, across a variety of sectors. The model we have then is obviously that investment goes in. We then work with the companies over a 12-month period, effectively to take them through that journey to the next funding round. And we run a very, very bespoke program. Some companies need a lot of help on the funding side of things. Some need, we do sort of complete brand redesigns. Not at the other end of the scale. We'll write financial models. We basically become part of the management team. And again, one of the distinctive things is because this sector, a lot of stuff takes longer. In tech, for example, you can run a 4-month program. Get to a pitch day, have a minimum viable product, and get investment. Our experience says that it takes a longer to do stuff, because there's always because one common thing about the sector is there's always stuff that happens. There's very few kind of virtual businesses. There are hardware that needs to be developed, or sort of fairly long sales cycles, because you're actually trying to do something. You've got to change something physically. There are the. I'm not saying that there are the odd exception. I mean, the e-company is one of those, and which is just around the sort of the PPA side of things. Which again, we're very comfortable with taking that kind of business model risk. But we really like working and building those relationships with those companies.
Yeah, you touched on so many things that I guess I've experienced as well in the last couple of years, where you're looking at offsetting the risk of an investment versus the potential market size and the team you've pulled together, / the readiness for the technology to actually make it to the market. I know certainly the Green Angel Syndicate receives now 600 or 700 applications per year, of which maybe 20 get funded. So absolutely there's an issue or say there's a whole load of entrepreneurs out there that haven't quite got investor ready but need some help, and so that's why your Accelerator program is so exciting. And especially when you're sitting on the table as an entrepreneur, there are so many things you don't know. And that's where someone like you guys is so helpful to any potential entrepreneurs out there listening. Andrew's done such great work pulling together these teams and helping everyone. I should ask, I guess, when you're looking at making these investments, how do you guys understand risk? So when you're looking at a company to help them to that investor stage or investor ready stage, how many applications do you receive per year, and how do you distill that down into something that you're happy to take some risk on?
Okay, so for the second fund that we raised, I guess we've looked at probably over 400 companies in that period, so we'll be making 8 investments out of that. So we're similar to the Green Angel Syndicate. It's not as though there's a shortage of opportunity. It comes back to the values. The core assessments that we make are, is there a commercial model, and can this deliver impact? So businesses, the more the revenue grows, the greater the impact. We do an initial mapping against the UN Sustainable Development Goals, and understand that we look like companies that are hitting sort of at least 2 or 3 of those sectors. And those 2 sort of assessments, again, just from past experience, you can see the companies that sort of fit. And then are going to be aligned with our mission, which means we're then aligned in supporting them and keen to do that. We also look for clearly the founders.
Who are they? Are they talented?
They haven't got a lot of traction. But if they've actually gone out and talked to prospective customers, worked out what things are doing, and so on. Very dynamic. We get a range actually of founders. We've got Brian from Petit Plis, who's just come out of the RCA. Petit Plis is an expandable baby coat fabric.
And the RCA being the RCA Accelerator, you mean?
Yes, yeah.
Okay.
So very, fairly inexperienced in the sector, but lots of sort of dynamism. At the other end of the scale, companies such as Rovco, which you'll be familiar with, the underwater exploration. Brian, the CEO there, has had 20 years in the sort of underwater inspection.
Well, again, business. I should admit, I was lucky to invest in Rovco through the Angel Syndicate. So,
I'm very excited about that.
So I know their story nicely. So it's an incredible piece of technology that simply works much better than a human and makes so much sense.
Yeah, absolutely,
for listeners out there, it's essentially a deep sea robot that helps to deconstruct oil rigs and to help to
sort of
deploy
offshore wind renewable and sort of maintenance inspections and so on. But they've got a really exciting video and sort of
it's the computer vision side, isn't it?
Computer vision side of things, which means that you don't have to put people on boats connected to wires to these. You can basically sit in your living room pretty much anywhere in the world and do and sort of.
I think it was the moment actually that the description of what it must be like for a diver going into the North Sea and not being able to see anything and therefore can't work for the day, whereas this robot is able to sort of carry on as if nothing's changed.
To say that one just as an aside, it's already. We've had a 4x valuation uplift from our initial investment. And there are talk around that we'll take that to about 10x. It's a very, very exciting business, and again, just shows that how relatively small amounts of money at a particular point of time can really
create real value,
growth.
And interesting. Sorry, Andrew, we got distracted by the Rovco story. You were unpacking the idea of the founders that you're investing into, and explaining a little bit about what you're looking for.
Yeah, so I guess my sort of take on that is there's no kind of one size fits all. People who've been experienced in the industry and have come up with if I do this, I can perform 20% better than conventional ways, but have already got the experience and the contacts and the contracts. So they're great businesses to be in, and about half of our portfolio would typically be at that sort of those kind of businesses. But you say, I'd sort of therefore slightly challenge this assumption around, entrepreneurs or people, who've graduated from university and jumped straight into things. Again, there's some great, talent, some engineering talent, but I think that's where, you came back to risk. We have to assess, we are going to have to put the commercial support in there. We're going to have to put the commercial structuring, and therefore what we're looking for at those sort of incredibly sort of talented, say, engineers or designers or whatever, how are they going to be adaptable? Are they going to listen? Are they going to say, look, actually I know nothing about this, so please help me write my financial model, help me get my sort of investment story straight, decide what I want to do, bring team members in with those kind of skills and experience. So a lot of that is around, I know everybody says the entrepreneurs are really important, but particularly at the early stage, they are absolutely critical. Not that they have to have all the skills, because I guess our value add is we think we can identify where the gaps are and help people to fill those. So I guess the final thing in terms of risk is, I mentioned about angel syndicates. Quite rightly, we'll be looking for that sort of sales traction. I guess because we've been on the entrepreneur side of the fence, our assessment is in 12 months, can we hit those funding milestones? Yes, your product, if you move it to a certain stage, and you go through a sales cycle with a social landlord, for example, will you be able to get an order? Will you be able to demonstrate that you've got that? And again, half of that is being able to put yourself in their shoes and go, well, realistically, are you going to be able to achieve that? So, yeah, I think I say that's why we're prepared to take a risk. Obviously, we, our objective is to double the valuation within a 12-month period.
Is it okay? So that's a metric.
And that's basically, I guess, how the whole, that's why this sort of this portfolio approach at the really early stage works, because you're buying the shares at half the price you would be later on, because we halve the risk, or however you like to look at it.
Fascinating. It's kind of one of the things that excites me so much about the area. When we touch on a few companies that are doing well, and there's others we haven't mentioned that probably aren't doing quite so well. And this idea of one size doesn't fit all as the entrepreneur, you often hear stories of this incredibly talented person that just saw this opportunity and off they went. But actually, there's so much hard work that goes on at this early stage to actually even get you ready to speak to an investor, let alone to actually sell anything. Cool. I wanted to talk a little bit around what it's like to approach an investor. So if there were any entrepreneurs listening out there, how would you like to be approached? Is there any way in particular that should be done, or any advice you would give as to the best way to market yourselves to potential accelerator programs or investors?
It's interesting because actually I have a great job in terms of, sometimes I'm on kind of the investor side of things, making those appraisals, and then other times companies such as Airex, for example, I've got a meeting this afternoon with where I'm basically part of the co-founding management team, and trying to sort of sell in both directions. So it can get quite
I must
interesting.
admit, Andrew, I had a set of questions here, and some of them are for entrepreneurs and some of them for investors, and I've got I've got waylaid as to which side of the fence we're talking.
I'm not saying you sometimes have to work out which hat you're wearing and make sure you don't forget which side you're doing it. But
well, perhaps you could share some of the stories you've used to get investors' attentions, and equally like how other people have got your attention as an investor.
Okay. I think the first thing is, again, on both sides is, I'd say cut the bullshit. Basically be honest. If you haven't got a sale, don't say I've got, everybody's seen these things. I've got this big pipeline. I've got orders worth, or potential orders worth this much, because any serious investor is going to go through that, and we'll find out that you've had a conversation with somebody. that you met at an event.
And
that
it's
does
just
not qualify
true.
as a pre-qualified sale. And the problem is at that point it's just confidence. So as soon as you called on one thing which is eminently verifiable, then everything else, sort of you build that trust. So the most important thing is establish that layer of trust. You're getting into a relationship, if you want to call it that, that is, it's a 5, 6, 7, maybe
it's a
more,
long time
relationship. you mentioned companies are going to go through good sides, bad sides. Yeah? If basically I would say if you don't like, so this is me with an investor, if you don't like somebody, if somebody's winding you up or is saying stuff and you lose that trust, you think, well, why am I going to invest all that time in working with that person? You've got to enjoy who you work with. So again, you come back to that personal side of things. So again, be yourself. There's no one size fits all. There's
be honest.
It's just be honest.
Yeah.
Because you can have the shiniest. Some of the worst companies I've seen have the shiniest pitch packs, because they've been through the whole thing. They've been coached. They've told you have to say this, and this, and we've invested in companies that had the world's worst pitch pack, but like the person, like the technology, you can fix these things. You can help these things. So I think that to me is the most important thing.
And that's such great insight, because actually so many people haven't. You've been working in this space, which is essentially early stage ideation, business creation, business investment, like scaling, getting to market, even an exit, specifically with a sustainability lens, which actually is almost rare and fantastic for it. No, that's great to hear.
Yeah. I mean, the other one, I mean, this is something that I would guess on that sort of theme. I think it was Doug Richards, who's one of the old sort of Dragon's Den angels.
Okay.
Said that he once basically raised money for a company. He wrote the top 10 risks about why this company and why this thing was going to fail, and then wrote, and these are the mitigation steps. This is what I'm doing to take those risks out of the business. And basically that was his
entire
pitch pack.
Wow.
Which at the time when I listened, I thought, oh God, that's brave and foolhardy. But actually, if you think about it, that's all investors really doing. Yeah. They're just going, what are the odds that I'm not going to see my money again?
Yeah.
Plus, do I believe that you're going to get to 10x? And actually, it's the management of those risks and how you're doing it and how you're structuring your business around it. Mm-hmm. I say it's a shame that we sort of ended up in this. I write a 10-slide pitch pack. It has these following slides. There's almost too much of a sort of standard side of things.
Well, it's so hard to summarize who you are and what your company idea is into 10 slides. Yeah. No, great. Thank you for sharing that, Andrew. And I just wanted to dig into a little bit the personal mission that you clearly have. So having worked with the Carbon Trust and setting up Sustainable Ventures in its original form, and the Accelerator and now the Workspaces, sustainability is the one kind of constant throughout this. Mm-hmm. Is there any particular reason that you decided you wanted to work in this sector, or anything over the years that's particularly caught you that really excites you?
I guess when I made the jump from I was at Bain, I made the jump into the Carbon Trust. I'd been in energy and actually had come across a company called Future Forests, which then became the carbon neutral company, which did sort of offsets, and had looked at that business, and that sort of brought kind of climate change to my attention. Now I'm aware that climate change has been on the agenda. I was seeing the other day, Margaret Thatcher was a passionate believer in sort of tackling the issue. So I wouldn't say I was but it started to come up the agenda, and I'd sort of seen kind of exciting opportunities in energy. I was in oil refining when I started my career. Startups and oil refining don't go together, so saw that there were going to be great sort of opportunities in kind of renewable technologies and fuel cells, and sort of could see that sort of excitement. And it has the advantage that you're actually doing something which is solving a major global issue, and that sort of the urgency has gotten greater and greater as we go through, and it's great at the moment to sort of see that it's back on the front pages. It's it's sort of
we're in a climate emergency.
Indeed. Yeah. So the answer to that is, to my mind, has got to be technology. How can we provide those technologies, those business models, I did a study way back called Carbon in All We Consume, so carbon trusting, which looked at, rather than sort of looking at industries and where the emissions were coming from, it was basically sort of taking that down to the individual consumer in terms of how many tons of carbon were they emitting in their home. After that, it was the stuff you bring in from from in your shopping, in terms of the embedded carbon in that, is the sort of second biggest thing. You've got transport. You could sort of start to see this. I guess it was sort of the moment I sort of went, oh, this has got to hit everything. Everything is we consume, everything we buy, everything we do uses energy. If it uses energy, it generates carbon in one form or another. And so this is something that is across all sectors. And I think people often talk about the internet is transforming things and it's ubiquitous, and actually energy is far more widespread because it covers online and offline stuff, and therefore every single sector, every single company, every single product is going to go through this change. This is going to be a massive upheaval. And I think because it is so spread, people don't really realise. They sort of think, Amazon's transformed online shopping. Yeah, fine, but this is going to happen, and it's going to happen, and that creates massive opportunities for entrepreneurs, because there is nothing out there that you can't come up with a lower carbon version or a more resource efficient version. And I say that scale of opportunity, we talk about it being a niche sector and so on. Actually, it could be the biggest sector, out there and going, and being able to contribute in a personal way to making that transition and making that change on a very practical level, in terms of supporting the startups that are going to move in and change the world. That's, I guess, what gets me out of bed in the morning.
Yeah, no, fantastic, and I would completely agree with you on all of that. Certainly the businesses that have signed up to the Paris Agreement and the governments that are out there that have to abide by the regulations that are coming in, and the populist rhetoric that we're seeing, globally now, it's such an important issue, and we need to do something about it. But it is the businesses that we start building today or in the last few years that are actually going to get us there, and that's where your role has been so interesting to learn about today. Thank you. Just one last area, I'm aware of time to try and get through if we can. You mentioned about investing or working with a lens of impact from a carbon emissions perspective. Have you ever looked at your actual impact from a numerical point of view? So if these businesses got to scale, or if you guys had as much impact as you could, what might be the result of that? Have you ever looked into that? I'd love to know.
So we're in one of the initiatives we've started this year is every company that comes into our universe, if you like, we basically will map their activities against the Sustainable Development Goals, and we do that again through a sort of use the language of a theory of change. So we look at how are their activities, how are they linked to delivering against those goals. So, for example, e-car club, we looked at where we were deploying electric vehicles, which are often in sort of lower paid, income poor areas, which basically provided, clean transport to people who otherwise wouldn't be able to afford it, or were spending lots of money on taxis or and so on. So tackling that transport poverty was a kind of key element and key thing which was being done. So measuring those the incomes, how much people were saving and so on. So basically getting that benchmarks in. Then we'd sort of then looked at the obviously the reduction in NOx and SOx and the health impacts that electric vehicles were having, and then obviously that then scales up to the global. Of we were encouraging first drives of electric vehicles. We were sort of seeding that people migrating from sort of internal combustion to electric vehicles and giving that experience. I think everybody remembers the first time you've driven an electric vehicle. It puts a smile on your face, and trying to do that. So we're basically putting those metrics in there. We're then mapping that out for other things. Obviously, at the early stage when people haven't sold a unit, it's very difficult to quantify the actual impact, but it's really critical to get the metrics, get the baselining metrics in place, so they know what they're measuring. They're if they're reducing costs for Rovco in terms of underwater inspections, and that then obviously then impacts through to greater deployment of offshore wind, but understand how many inspections are you doing, what's your cost base, and so on. So just getting those basic things in place, because as they get larger and larger and grow more and more, they've then got a track record to show and can sort of evidence, and also be proactive in terms of tweaking their business model, again, to come back to this commercial, how do I drive commercial success by increasing my impact? And so we're trying to enable companies to put those tools in place. And we've just released an impact report on our first Accelerator cohort, where we've looked at the commercial successes, the value uplifts in share price, the orders won, but also what they've been delivering against those sustainable development goals, and then we can start to see across that cohort where the sort of the biggest areas of impact are.
Interesting. And I guess once you understand which companies have had the most impact, perhaps the businesses that are applying to come into the next cohort, you can then start to look at the similar areas that might do the same.
Yeah, absolutely. And I think we are just about to launch a new call actually for Climate Kick, who are run a series of accelerator programs. We've been selected to run a new style of accelerator, which we're launching today actually.
Oh, fantastic.
And that's going to be around the theme of healthy cities. So that will be looking for companies and startups that can basically sort of look at e-mobility, we'll look at building energy efficiency, distributed energy, and so on. So creating these themes that are tackling a specific problem that cities and corporates within those cities are facing and looking for solutions, and basically developing that as one, almost kind of impact focused, but clearly looking to take them on the same journey through investment. So we're quite excited about how we can actually, it's going to be a very new
I'm excited
departure.
just hearing about it.
I look forward to hearing about the companies that come out. Yeah, so we'll definitely, we're definitely looking for about 8 companies to participate in that, and hopefully more in future years.
Well, Andrew, thank you very much for sharing your insights and your time with us today. Thank you.
That's been a pleasure. Thank you.
That was The Green Adventure. Thank you for listening. If you enjoyed the show, then please help us out by sharing this episode with your networks and rating us on the platform wherever you may listen in from. For any questions at all, we'd love to hear from you, so please reach out on social media or email. Whether you're wondering about a technical term that's been discussed, would like an intro to a guest from the show, or even perhaps feature yourselves, we're here to help. My Twitter handle is @JakeWoodhouse, spelled as it sounds but drop the final E. My email, jake@greenadventure.com. Remember, that's ad spelt with 2 Ds. Finally, for the notes, links and episodes that will be coming, visit www.greenadventure.com. Remember, that's ad with a double D. Until next time, we'll be back soon. Thank you and goodbye.